So I really think as investors consider where to allocate some of the gains that they might have taken in U.S. stocks, looking to diversify internationally, looking in particular at emerging markets where if we're headed for a soft landing for the global economy, if the Fed is going to continue easing, even if it's not super aggressive rate cuts, that would be good for emerging markets typically. But emerging markets haven't really participated as much in the gains that the U.S. market has. And so I think looking to diversify internationally, even into technology, which hasn't run up as much in markets like South Korea, certainly not in China, even in Taiwan, there are good values within the technology space. And so I think that's a place that active investors who can be selective might go to find better opportunities in 2025.
Mm-hmm. What about India? Do you have a view?
Yeah, so I think India is an interesting market because it has experienced a run-up in the broad market over the last couple of years. So Indian valuations are a bit high relative to other emerging markets. So I think they're, like in the U.S., investors have to be selective. Now, when we talk about the threats to this good news outcome for the global economy, India could be a place where you find winners and losers from tariffs. You know, certainly as folks shift supply chains to avoid China and the big tariffs there, it's possible that connectors like India, Vietnam can benefit from that. So I think that there are definitely pockets of opportunity in India. But when I look at emerging markets, ex-China, I think South Korea is a market that's really interesting because valuations are very low. Half of the market is technology. And so I think that's an area where investors might want to focus as they diversify out of some of these U.S. stocks that are at high valuations.